Hello, Jim here. It's been a rough couple of weeks in the markets. We had another rough week last week. We ended up down for the entire week. I'm not sure if this is going to continue, but I do want to mention one bright side. Some of the ETFs I really like to trade, IWM and SPY, have come down enough to the point where I am looking at trading them again. I actually did a trade on Friday on IWM. I'll share that trade with you. It was a vertical put credit spread, one of my favorite trades or go-to trades. So I'll share that with you. And then I'm also looking at potentially running the wheel with IWM or SPY. So I'm going to share that with you, what my thoughts are. So stay tuned. I think it's going to be well worth your while. Okay, let's jump right in. I've opened up IWM, which is the ETF for the Russell 2000 companies. It's the one of the ETFs I really like to trade. I probably have done, I don't know, 50, maybe even more than 50 trades over the last 2 or 3 years. I did a lot of IWM trades back in 2022, 2023, and even 2024. Now, recently, when they shot up so much, I haven't done as many trades on them. I think it's been maybe 4 or 5 months because, again, I felt like they got too pricey, but you can see here they dropped and they're right around 205 currently. They dropped as low as they almost went below 200, but I really like to trade them around this $190 range. I believe they're not overvalued. If we stretch the chart out and we go maybe 5 years and we go to 190, I don't believe so. You can see the line that goes across here. I don't believe that's overvalued. But up here, I did feel like it was overvalued. So I like where it's come. It's one of the pluses related to a market downturn. I can start trading them again. I did a trade on, like I mentioned, on Friday, and it was my go-to trade, my anywhere from 40 to 60 DTE, 15 Delta, and made, I think, 220, 230. I'll share that trade with you guys here in a moment. But what I really like about bar charts is this interactive charting feature and how you can set up the Bollinger Band, and you can do a bunch of different types of interactive charts. I'm not a pro with it by any means, but they give you quite a bit of things to do with it, or that you can do with it. I also like their options chain. They do a nice job with it too, so I can pick the date I want to do the expiration for 17. I can pick the number of strikes. I can actually download and do all sorts of things with these. But I typically like to do around a 15 delta. Let's come down to the puts. And here is a 15 delta right around 187, 188, which definitely isn't bad. And it has fairly good premium between around 160, 170. If you go a little bit higher and you do a 16 delta, which is a lot of times I'll consider that for $1 more, if the premium's a lot more, I will look at doing a trade with that. Now, let me share with you what the trade looked like that I did. This is Patreon. This is where my memberships are. This is what I share with my community. Even at the lowest tier, you get access to Patreon, all the collections, all the different chats. And I share my trades. I make a trade, and I literally, minutes after I make the trade, I will post it to Patreon here, and I'll show you what that looks like. And at the very beginning, I posted a planning worksheet for today, and here's the trade I did on IWM. And then, so I share quite a bit of detail. I share why I like it, what delta I used, how much the premium was that I collected. I collected right at 201. I did an expiration of 411, which is closer to 30 days. I believe it was like 34, 35 days. And I go into a bit of detail. I share a screenshot of the trades just so people can see, like, this trade was done on Fidelity. Schwab looks a little bit different. And then, every time I do this, I might have, people might add comments in here, like I've gotten a few comments. So people might ask, well, why did you do this trade? Could I do this as instead of vertical put credit spread? Could I do it as a cash secured put? What I'd like people to do is determine, how much risk they want to take. So I did a 17 delta here. They could maybe go down a dollar or two and do like a 183, 173 and take a little bit more risk, or potentially go a little farther out and again go even, with even lower strikes. So I typically, what I do is I post it here, then I go out to Discord and I also post it there. So you can see here on Discord, I have down here trading areas, and then I've got, here's where I post my trades. I have quite a bit of detail for my members. This is, if you're a Trader Club member or a coaching club member, you get access to this. I have announcements, I have coaching, planning, where all my planning worksheets are, my group meetings that are every other week. Then I have details about the brokerages, so people will ask questions, how do I get access? What do you think of Robinhood, or what do you think of Schwab or Fidelity? And I keep adding more here, but I have members that currently share quite a bit. Then I have a general area, then a place for people to have trade discussions, a place for riskier trades, a place for crypto trades and discussions, and then kind of getting started, and a whole section with getting started. I don't worry so much about other people's videos, other YouTubers. If you have a good video or you have a good resource, then I'm all for letting people post it. I also have trading as a business. I have an S Corp. So some people want to set it up as a business, either as an LLC or an S Corp. So there's a lot of detail here, and even some videos that talk about how to do it different ways. So quite a bit. If you're curious about my memberships, I typically have detail in the description. I encourage people to give it a try. I'm month to month. I don't require a phone call with me. I don't force you to pay for a year or stick with me for a year. You could join, for 1 month and then leave. I have a lot of people who come and go. Some people that will upgrade to higher levels as they're learning, and then they'll downgrade to just the Trader Club. And it's very reasonable. So I encourage you to take a look at maybe worth your while. So next, let's jump into what I had mentioned at the beginning, that you could potentially use IWM as a wheel trade, and I'll talk about that next. Now I've opened up the Schwab trader page. I still use the old interface. I also use Thinkorswim, but I find for the videos it's a little bit easier to use the old interface, just to show people what they could possibly do. So one thing I wanted to show is you could potentially do IWM as a wheel trade. So what I'm showing here is 417, 198. And if I'm going to do a wheel trade, I typically will do it with a little bit more risk. I do like how Schwab does this. Now you can't see the numbers, but I can come back to Barchart, and if I go out to 417 and I look for maybe around a 30, 35 delta, and this is a 24, so here's a 30 delta, which is 198. So if we come back here, you can see 198, you could bring in between 388 and 395 for one contract. If you did four, well, let's stick with one, and then I'll mention four. So for one contract, you would need, nearly $20,000. But if you're doing, 2 or 3 stocks, potentially this is safer. Again, if you look at where IWM is currently at, it typically does not move as much. You don't have to worry about earnings. It did go up quite a bit recently. So, and if it goes up, then this trade just becomes very profitable. So you would need close to 20,000. So if you had a $60,000, $80,000 account, you could potentially, do one of these or all four. You might say, well, I only want to do this. I don't want to do anything else. And then you could potentially do 4. Again, you would need 198, but you could go up to 200 and say, well, I'll do it as in an $80,000 account. I would earn 1820 for those 4. Let's look at 455. We'll go down to, so a lot of times I'll do the ask. I'll go $2 lower, and that's what I would try to do. So this is, one trade. It's for a month. You're making 18.12. So not bad. You could also play with going a little bit higher. Again, it's if you're doing the wheel and you like the price, it might be worth going a bit higher. So if we tried 205, again, you could do 25.88. Another choice is instead of going so far out, you could do it weekly. So you could say, you could try a 314. So Friday was the 37. You could do it with a 314, go down to 200. Or you could, again, could do it right around 205 and bring in 12.12, and that's for like 1 week. Then you could potentially do it for the next week. Now, but say it gets assigned to you and you suddenly own the 400 shares, well, then you could switch and you could do a put. You would have been assigned to 205, but you would have brought in around $3. So you could switch to a call at the same price, and it's even more. So between 4 and 415. So you could bring in 1660, and you continue to do this week in and week out. So at this point, you would have brought in almost $7, $8 of premium. So your cost basis every time you do this would continue to go down. So that's one way. I've actually got a spreadsheet that I'll share with you guys here in a moment. But my favorite trade is this vertical put credit spread. I like to go out, so I would typically go out to 417, and I do this a lot. So I'll do a trade like this, then I would do probably, would it be? Let's say it's 187, so sell to open, and then I would do 177. Let me find 177. Well, we have 175. So that would bring in 94.99. I could even go a week shorter like I did in the trade over here that I shared with you guys. I did 185, 175 for 411. Let's see if that one still exists. So let's do 185, 175, 62. So it looks like it's dropped a little bit. And I don't know if it's because of, it's over the weekend, so the numbers might not be completely correct. So 185, I'm selling one put for 185, and then I'm buying a 175. So I'm protecting myself on the downside, and I'm bringing in anywhere from 62 to 71. Now it could be that, and that's probably what happened between the time I made the trade over here. I believe it did go up $5. I believe the price at the time was, I don't think we can't see the deltas right now. For some reason, their system's not showing deltas today. But I could potentially go down, I don't have much choices. I could maybe go up to 190. I could come back here and look at 190, go up to 411 out of curiosity. Let's see what that looks like. And this is the kind of stuff I do at different times. I like to dig around and see potentially what I can do. So 190 is right around the 17 delta, so I could very well do that too. So I could do a 190 and then a 180, and there you go. And that's like what I like to see. And then typically what I would do the 104, and then I would go $2 shy of the 108, and then that's what I would try to fill it. I would do 2 contracts. Sometimes I'll do 3. If IWM drops another $5 or $10, and I can do this at 185, 175, or 180, 170, I might go with 3 contracts and pick up closer to $300. Again, I've never been assigned. I've traded IWM like this during 2022 when the market dropped so much, and it really worked out well. And you can also do this with SPY. I forgot to mention up here, if we go to SPY, it had a similar drop. So a lot of these same trades you could replicate. You could look at a 15 delta for, 35, 40 days. If we come up to the interactive chart for SPY, again, you'll see, let's go to 1 year. It's because I've got it at 5 years. Let's go to 1 year. and it's pretty substantial. You see here it's slightly below the Bollinger Band. So another situation, and if it continues down, it's just like IWM. I might do a trade in SPY and a trade in IWM. And I find that the premium is pretty close. It may be a little bit better with SPY at times because it has more, typically has more strike prices. So, I prefer to do IWM just because it's less expensive instead of 500 and what is it, 75 currently. You're talking 200, 195. It's just easier number wise, meaning if you need a couple hundred shares, it's, 60,000 instead of 150,000. So next, let's actually jump into the spreadsheet and let me show you what this might look like longer term. Okay, so I just played around with some numbers using IWM. What would it look like if I decided to do 4 cash secured puts in an $80,000 account or $82,000 account, and I just did the wheel just with IWM? In some ways it would be less risky. But here's projections for the rest of the next month. So to do this, I kind of came up with an idea of what I think may happen over the next month. Market drops another 5%, and Trump takes steps to turn the market around. I do believe, and I could be completely wrong, that if we get into a bear market across the board, and that he may change his tune, he may have some clarity related to the tariffs. He may take some steps versus kind of what he's been doing, kind of winging it lately, and maybe even go into more detail, and really kind of lessen the stress in the markets. I think this uncertainty about tariffs is definitely having an impact. All indexes are in correction, but not bear market. So it would be like near bear market. Now, IWM is actually fairly close to being in a bear market. NASDAQ is down more than the S&P 500. But if we get another 5% drop, they'll all be, either in a true bear market or near a bear market. At these prices, IWM would have a 19% drop since peak, and the SPY will be just over 10% and also be in a correction, but not a bear market. Tariffs are squared away, and we get back to an up market. So, my thought process is by the end of this month, we may hit bottom, and then we may start recovering because, finally we get some clarity about tariffs and things. The fear mongering seems to decrease. We're also being hit with some labor market issues, and hopefully some of those will also be ironed out a little bit better than they currently are. And then you could repeat this month in and month out, just like with the wheel. Now, it may become more difficult. What I've found with IWM, if it shoots up way too high, then it's a little bit harder to work with. But if it stays below 200 or around 200, I find it's really good for making trades. And same thing probably with SPY. So you could also reproduce this with SPY. But it would be a lot harder. You couldn't do 4 contracts with SPY, because if you got to sign with 4 contracts, that's almost $200,000 that you would need. Whereas with 4, right around 200, you're talking 80,000. So it would be a little bit harder to do this, but definitely could do vertical put credit spreads or Iron Condors with either one of these. And I might also start doing Iron Condors with both of these too. I do like SPY, and especially when it gets to a point where I feel like it's not overpriced. I do want to own more. I actually do own some SPY, but I think like 30, 40 shares. Does not include 4% interest you can earn on your put cash. So again, almost all my puts are done in my Fidelity account where I earn 4%, and it's pretty substantial. A bunch of that interest hit my account late last month, and it's a lot of interest. So here's the beginning sequence. You start with 82, you sell 4 cash secured puts at 205, and you bring in 1204. Now, I did try this yesterday, and it seemed like Schwab was working a little bit better. It seems like the deltas aren't working today. So then the stock drops to to 200 and the cost basis is 198. So the fact that I did this at 205 and I brought in 1204, that's how I got to a 198 basis. And then, so I do get assigned because it drops, and then I get assigned at 205, and that's where the negative 82,000 is. Then I sell a covered call at 205 and bring in another 1204, and it pretty much expires, and then I sell another covered call at and I pick up 2,096. Actually, because the stock has come up a little bit at that point. And then it gets assigned away at 198, mainly because the covered call strike price was 198. And then because it goes to 199. So when it gets called away, I pick up 79,200 in cash. So, and then at that point, if I measure all the premium I've earned up to that point, my cost basis would be 191.50 if I still had those shares. But then I trade 4 more cash secured puts at 195, mainly because of where the cost basis is. I bring in more because I'm doing it actually in the money a little bit. And then my cost basis keeps dropping because, again, I keep being able to wheel it. Then I trade 4 more cash secured puts, bring in another 1204, again, because it's really close to the money or slightly above the money, or just slightly out of the money. And then at that point, my cost basis is 183. Stock moves to 210. It's then at that point it becomes very profitable, and I can continue to roll it the way I've been doing. I might just have to do it at higher prices, and that's for 1 month. I mean, we had started with an expiration of 314 and finished with 44, but in 1 month I would have made the ending value of the account would be 86, almost 87,000, so 86,994. My total gains was just 4,994, which is just these two, this subtracted from this, which is like a 5.7% return. Now, I may try this. I may do it as a paper trade within Thinkorswim to see if this is fairly accurate. Again, I've been very successful with IWM. Some of the stocks that I've been hammered on, like Polaris, Lumen, Big Lots, some of those, if I hadn't made trades in them, I could potentially have done better. And this 5.7% is a little bit better than wheeling some of the stock values. Now, I don't know how accurate the numbers are. I used somewhat accurate numbers from Schwab yesterday. So this could potentially be very profitable. If 5.7 in 1 month, you're talking, almost 70% on a yearly basis. So, and then I came up with a couple other strategies I haven't had a chance to research. You could run vertical put credit spreads monthly using 4 contracts with a 15 delta. Just do that just to earn extra income. And you could run IC, which is Iron Condors, monthly using 4 contracts and a 12 delta, which typically if I do Iron Condors, I like to do 11 or 12 delta, meaning the strikes are either a little bit higher or, lower, and I take a little bit less risk. In some ways that makes it, especially with IWM, a safer trade. If it's typically going to go in one direction, so it's either going to put the put at risk or it's going to put the call wing at risk, and you can adjust them accordingly. And I've found it, especially in Schwab, it's relatively easy to manipulate the trade. It's a little bit more difficult in Fidelity, the way they structure the relationships between the wings and stuff. But that's what I wanted to show you guys. What do you think? I'm definitely going to be trading more ETFs while we're going through this correction, and hopefully it doesn't become a bear market, but it might. What are your thoughts? Do you have other ETFs that you would like to trade? And what I did here, you might want to try with SPY, maybe paper trade something like this. Again, when I look at my successes and the few mistakes that I've made, it's primarily been stocks. I've of all the ETFs, and I trade a lot of ETFs. Hardly none have ever been assigned to me. I think I had SCHD assigned away, but it's worked out pretty well. I do have one ETF that is in the money that I will have to probably roll this coming up week. But I should not have a problem rolling it. And again, it's at a price I'd be happy to own it. So let me know what you guys think. What are you thinking about doing something like this? And if you are, share whatever stocks you might be looking at doing it with. So, and as always, thanks for taking the time to watch, and I look forward to seeing you next time.